What BlackRock could do here might severely harm Bitcoin. It appears that BlackRock might try to copy Bitcoin in order to manipulate the market, and this could lead to a major crash in Bitcoin. And how they proceed, Larry Fink made very clear in a recently released interview. Don't you think their SEC filings, that is the filings with the US Securities and Exchange Commission, support this? Listen to this now, because this doesn't just concern Bitcoin but reveals the true face of Larry Fink and BlackRock. Imagine this, the BlackRock Bitcoin ETF becomes increasingly successful. At some point, they then propose an environmentally friendly version of it based on proof of stake. And a small, perhaps somewhat larger but loud group on X, formerly known as Twitter, naturally rejects this step and warns of the consequences that could arise from it. Yet BlackRock and the governments and other companies still adopt this new version and henceforth refer to it as Bitcoin. And after a few months, no one is interested in the miners' criticism anymore. Their voices fade into nothingness. Sounds like science fiction perhaps, but when you see how powerful large institutions are becoming in the crypto space and how strongly they influence trends, this scenario is not so far-fetched. So listen up. The question remains, what does this mean for you now as an investor? If you're not careful, the Bitcoin you know could one day be something entirely different, and BlackRock will definitely have a hand in this. And before we delve into that, now is the time to build financial freedom through crypto. Now that the masses are increasingly entering the crypto space, and if you want to do it, want to learn Bitcoin, want to learn crypto, want to know which cryptocurrencies I invest in, then click on the link in the description below the video now. Watch the video, it's free and only available for a short time. And here you see an excerpt, a screenshot from the SEC prospectus of the iShares Bitcoin Trust. The prospectus states that the provider, namely BlackRock, in the event of a split of the Bitcoin network, can decide at its own discretion which of the resulting networks will be considered the correct Bitcoin network for the trust, provided the trust agreement allows this, and it is emphasized that this decision could negatively affect the value of the shares. They write this here. It is explained that the provider makes its decision to the best of its knowledge and belief, taking into account various factors. These include, among others, the assessments of Bitcoin's core developers, the stance of users, companies, and Bitcoin miners, as well as the general acceptance and support within the Bitcoin community. And a large part of this naturally also influences BlackRock, such as the Bitcoin miners, the companies, and so on. The actual computing power in the network and other relevant aspects are also included in this assessment. The prospectus points out that there is no guarantee that the provider, namely BlackRock, will select the most valuable network. And there is also the possibility that the provider may come to a different assessment than shareholders, your own crypto, or other market participants, which could also affect the value of the shares. So BlackRock has a free pass here. And I wish this document were fake. Everything you need can be found on page 22 of the iShares Bitcoin Trust ETF prospects. Again, it is explained there that in the event of a split, that is, a hard fork, the Bitcoin network, the sponsor of the trust, namely BlackRock, decides at its own discretion which of the resulting networks is considered the correct Bitcoin network for the purposes of the trust, that is, for the purposes of BlackRock. And this decision can, of course, negatively affect the value of the shares, especially if the sponsor, namely BlackRock, has a different assessment than the shareholders or other market participants. And furthermore, they write on page 22 that a hard fork could change the source code of the Bitcoin network, including the limitation of the maximum amount of Bitcoin to 21 million. Oops, what could BlackRock be planning here? Although many experts currently consider such a change unlikely, there is no guarantee that this limit, which is expected to be reached by the year 2040, will remain unchanged in the future. If a hard fork that lifts this limit gains broad support, the maximum amount of Bitcoin could be increased. And that might even be in the interest of BlackRock in the future. And that could naturally negatively affect the value of Bitcoin and the price of the shares. Additionally, changes in the name or rebranding initiatives by developers, users, or miners of the Bitcoin network can face rejection in the crypto community. So currently still, this could also reduce the value of Bitcoin and thus the shares. And in the past, such renamings have already taken place. For example, with Bitcoin Cash, which is sometimes referred to as Bitcoin ABC, to then differentiate itself from other forks like Bitcoin Satoshi's Vision. And another example is Zencash, which was renamed to Horizon in 2018. So it is difficult to predict how such changes could affect the recognizability and acceptance of a digital asset. The fact is, an unsuccessful rebranding could result in the expected benefits not materializing, and the value decreases. Basically, the value of your shares is directly dependent on the Bitcoin price, which is subject to strong fluctuations. Of course, it can be. And various factors like market trends or changes in acceptance can naturally also lead to significant price fluctuations. and negatively impact the value of your investments. We must absolutely be aware of this, and of course, BlackRock is aware of it too. And they even write, the Bitcoin price can fluctuate greatly and is influenced by many factors. These include, among others, an increase in the global Bitcoin supply, or a decrease in demand for Bitcoin, the general market situation, and the sentiment towards digital assets and blockchain technology. Trading activities in crypto, which are often unregulated, could be partially manipulable. They write this in this document. The use of Bitcoin as a means of payment, a store of value, or for other purposes, as well as the further development of the underlying open-source software of the Bitcoin network to meet the needs of users. So, you are talking here about the expansion of the amount of Bitcoin, manipulative trading practices on unregulated platforms, splits, which are forks in the Bitcoin network, the expectations of investors regarding interest rates, inflation in fiat currencies, or the exchange rate of Bitcoin. Furthermore, they mention the behavior and perception of consumers towards Bitcoin and other digital assets, as well as negative events, headlines, or reports in social media around the crypto and blockchain world. Rules and restrictions for deposits and withdrawals of fiat currencies to crypto, where we are increasingly seeing more regulation. Then there's the liquidity in the crypto markets and changes in trading volume. Corporate bankruptcies, insolvencies, hacker attacks, fraud, or investigations against crypto companies, platforms, banks, or other service providers in the industry, which we have repeatedly seen in the past. And according to BlackRock, these factors can cause the Bitcoin price to rise or fall significantly. So, it's worth keeping an eye on these points if you are interested in investing in Bitcoin. And at first glance, this all seems to be the case. Harmless. One might say, is this perhaps just a reasonable precaution in case a major Bitcoin hard fork occurs? That is certainly possible, but there are also a few issues. Firstly, in the event of a hard fork, the sponsor, meaning BlackRock, decides which version of Bitcoin will be supported. Basically sounds like vague legal jargon, doesn't it? Without clear criteria in advance, there is room for arbitrariness. Secondly, this wording in their submission seems suspicious. BlackRock is, after all, a profit-oriented company. They are obligated to increase their clients' money. So why would they ever support the less valuable fork version? That would mean less profit for their ETF. And this is exactly the crux of the matter. There is no guarantee that the sponsor, namely BlackRock, will choose the more valuable fork. This decision could negatively affect the value of your shares. But the answer here is simple. BlackRock knows that the larger community would reject a Bitcoin split. The price of the split Bitcoin would be lower than that of the original Bitcoin. Before the split, the question now is, are you perhaps preparing for this reality? Do you still think BlackRock is just providing reasonable transparency here? Remember, this is the company that has openly stated it enforces behavioral changes for its purposes. Take a look at this video clip where Larry Fink talks exactly about this. And that's exactly what he says. He specifically says you have to force behaviors, and at BlackRock, we force behaviors.
Behaviors are going to have to change. This is one thing we are asking companies. You have to force behaviors. At BlackRock, we are forcing behaviors.
So he, or BlackRock, wants to force people to their happiness, or to BlackRock's happiness. And regardless of BlackRock's intentions, does this now pose a threat to Bitcoin? In my opinion, no. And here's why. All centralized Bitcoin forks in the past have failed. If BlackRock were to fork Bitcoin, their Bitcoin ETF would continue to receive passive inflows in the short term, but in the long term, capital flows. Always to where the best returns are. And that will never be a centralized version of Bitcoin. Nevertheless, such an event could trigger a massive bear market. That's why it's important for you as an investor to be aware of the possibility of a potential BlackRock Bitcoin fork. Because BlackRock has always done things in the past that were not in the interest of individual investors like you or me, but always in the interest of BlackRock itself or its investors. This means for us, a well-informed investor always has better chances, and it's 1,000 times better to know about it than to be confronted with a fait accompli and simply be surprised if BlackRock really decides to take this step. Therefore, it is also so important now that you build financial freedom through crypto, or at least lay the foundation for it. You can do it with me or learn on your own. Bitcoin, learn crypto on your own. So if you want to build financial freedom through crypto now, you want to know which cryptocurrencies I invest in. Click on the link in the description below the video. Watch the video. It's free and only available for a short time. Because I would like to address that. According to the SEC filing of the iShares Bitcoin Trust, the provider has the right to independently determine which network is considered Bitcoin in the event of a network split. And this decision could affect the value of the shares. And it may differ from the assessment of the shareholders or the market. Nevertheless, such a split could significantly impact the market. BlackRock has significant influence to enforce that as well. And although central Bitcoin forks have failed in the past, it remains important to keep an eye on the intentions of large institutions, especially those of BlackRock. For investors, this means staying informed, remaining critical, and understanding that manipulations can influence the market or are part of the market. And BlackRock has proven this several times in the past.